Alright, today is January 25th, 2024. Damn, I think it's my sister's birthday today. I gotta remember to wish her a happy birthday. But here's the NASDAQ chart, and I have this indicator day separate, and it just separates the days. For some reason, it's at 1 o'clock instead of midnight. I don't know why. But so I got this chart. I leave it on 1 hour for the most part. At least all of the order blocks in which I outline are outlined on the 1 hour chart. So any black line here is the top of a bullish order block, and any red line is the bottom of a bearish order block. So I just go around, and whenever I see price make a notable reversal like this here, goes up, comes down, I say, okay, trade it up into this bearish order block. Right here, comes down, trades up, comes down and trades up once more. So this is a notable reversal here, especially since there's this move. So I put this bullish order block here. And so look at this one, bearish order block. This is FOMC, so we went a little bit above it. But if we backtrack here, there's this one, or any of these really. So, but I just did this one just to keep it simple. So it trades up here, trades up here, trades up here, rejects 3 times. So I note this one. That's not my point though. My point is this. So here's a when I'm working within the order blocks, I'll put a box around them too. So there's a bearish one. Here's the bottom. Here's the actual order block. And so we got this here, this one here. So we're trading between these two right now. If we look at this range, from this low to this high, this is a low formed 2 days ago on Tuesday. This is a high formed yesterday. So this is the range that we're trading within right now. So I drag a fib from here to here. Right now we're trading within the premium range. We're in the top half. And then if we look at this smaller data range here, from this high down to this low, which we formed yesterday, this is pretty much yesterday's entire range. If we look at this, we're also trading within a premium range. So we're in a premium within a premium, and we have some relative equal lows down here. And if we look at this big move here, we never did come down to a discount. So this discount range needs to be traded to. Well, I think it needs to be traded to. I'm not sure. Based on my understanding this far, I'd say this needs to be traded to. And we have lows here, and we have price trading in a premium within a premium. Whatever long position they accumulated down here is tapering off because we're not making higher highs. So I think their net long position is coming to an end, and they're going to start accumulating short positions and getting ready to sell them down here, or I should say buy them back down here. They're going to sell up here in a premium within a premium and buy them back down here. Go down to a 15-minute. Here was a bearish order block. We traded up through it. Then we entered this one, and we didn't trade up into it very far. Now both of these are within like this big one, but I'm just using the most recent ones. So price comes down into this bullish order block here, which I'd say it really came down into this one. But like I said, I'm just using the most recent one to keep it clean. If we trade through this, then I'll backtrack here and extend this one out in time. Or, yeah, this one out in time. So, trade back up into a premium, into a bearish order block. So we're in a bearish order block in a premium of our short-term range and more intermediate term range. Long-term range, we're in a premium as well, but I wouldn't expect price to come. It'd be asking a lot to expect price to come all the way down here or even further. So I'm just looking at short and intermediate term range, being like within the day and within the week. So we're in a premium within a premium. If smart money was going short, they would do it in a place like this. If we're failing to get through short order blocks, that means that smart money has no more long positions to pair up with them. But looking at the other side of things, a thought I just had was equilibrium reaction. So look, top of the range, bottom of the range, trade back up through equilibrium, come back down, and look at this reaction off equilibrium, aka discount range. I'm looking at specifically the discount range because this is where the long positions will reside, from here to here. So if we look at price, this is my intraday trading chart. I have the same levels transposed from this one to this one. If we look at how price came down and reacted to the discount range or equilibrium, we trade up through that first order block here, trade up through it, trade up into this next one, and don't make it through, trade back down. And there was actually a quite an energetic move down right here. Went through all of this. If we go to a 3 minute, this is the lowest order block before this stuff down here. Went through this one down here. But if we look at how price reacted to equilibrium, I mean, sure, we're at the perfect point to go short, smart money is, but if we look at how it came down to equilibrium, look how strongly it reacted here. So here's what I want to see, I guess. I want to see if price makes it through this order block. This is a premium. If we come up to the premium range and make a failed higher high and start to sell off and break this low, then I'd say might be a shorting possibility with this target in mind, these lows here. And if not, at least these lows or this bullish order block in this discount. Because if smart money accumulates short positions in a premium, they're only going to offload them in a discount range. And if smart money wanted to sell short in a premium, we're in the place to do that right now. They're not going to accumulate any more long positions than what already exists in this discount range here, right? They're not going to accumulate a large long net long position in here, because if we look at the more intermediate term range, we're in the premium. So what I see happening is them accumulating a net short position, offloading it down here, or even I suppose down here, but more likely if they're going to accumulate a large enough net long position to break this high, it's going to be from all the way down here. They want to get the best price possible. So I see price coming down here. They can accumulate a large long position and take price up above here, but it may happen here too. I'm not sure. There is a large bullish order block here, keep in mind. So they may not want to, depending on how many short positions they accumulate here, they may not be able to I guess neutralize this bullish order block. They won't be able to pair up enough short positions to get rid of all the longs in this bullish order block here and make it down here. So they might just accumulate more long positions from within this bullish order block, but we'll see. I'm not entirely sure. in the premium of this range. We're in the premium of this range, trading within a bearish order block. Look at the institutional order flow. This is a 1 hour chart. From this bullish order block when price entered here, watch the institutional order flow. Here's a bullish order block. Price trades back down into it. Trades higher. Now we have a new higher bullish order block. Price trades down into it. Does not break its low. Trades higher. Now we have a new bullish order block. Price trades down into it. Trades higher. Hello? Hey.
Hi, is Robert there?
It ain't fucking Robert. Fuck off. Hey, dogs! Would you stop barking? There's nothing to bark at. Hey! Dang dogs. Alright. Here's what I was saying. We have so price trades down into this bullish order block, trades higher. Now we have a new bullish order block. Finally, price trades down, no longer respecting this bullish order block. It breaks institutional order flow when it passed the low of this order block. So now we're looking at a shift in market structure here. And this in itself means nothing, but it's the fact that we're in a premium of this more intermittent range, and we're in a premium in this more short-term range from high to low, premium discount. And we're trading in a bullish order block in the premium, a bearish order block in the premium. So basically the stars are aligning and the market's getting ready to go lower. And that happens. We break institutional order flow right here, trade below it. And here's a key observation. From this high to this low, the range that I've already defined, price trades down, breaks institutional order flow. It trades all the way back up, right to equilibrium. If I go in my fib settings here and turn on, how do I do this? Coordinate, style. I think I gotta scroll down. Prices, here we go. Equilibrium is 681.25. And if we look at the high of this candle, 682. So it went just 3 ticks past equilibrium. And to give you a reference of how precise that is, if we look at just this high to this low here, that's roughly 600 ticks. And it went just 3 ticks past equilibrium here. So pretty precise. So price comes down, breaks institutional order flow, trades back up to the premium, to the equilibrium, and goes lower here. All right, friends, I'm back. Just working on this video, and I figured I'd catch up with you, show you what happened here. So I already showed you what happened here. We traded down into this bullish order block in the discount. Actually traded below this entire range here, which was expected. And we traded into the discount range. The discount of this intermediate term range here. To this bullish order block. Traded right to it. And now we're moving back up. So, figured I'd just show you where we're at now. Going down to a 15-minute, get a closer look at this. 5-minute. And 1 minute. So I find it extremely helpful to outline a range and then outline the first PD array within the range. So if we're trading up here, I'm going to outline the closest PD array in the discount here, which would have been this bullish order block. And so now I know, okay, if price goes lower, when it goes lower, I know where we're going. We're going here because this is the first PD array in a discount. Say it were to be the opposite, we're trading down here, I'd outline the first PD array in the premium.